Hi, and thank you for joining us as we continue our discussion aimed at demystifying what tax governance means for your business. My name is Carney. I'm an indirect tax specialist here at RSM in Brisbane. I'm joined by Kielenniva, a specialist from our corporate tax division. To recap, in our first segment, we discussed broadly what tax governance is and what justified trust means. In our second segment, we discussed the criteria the ATO uses to determine what program applies to which type of taxpayer. This is important as this drives what a taxpayer gets measured against. In our third segment, we discussed the various ATO ratings and why it's important to aim for a good rating. Before delving into the detail of the 7 principles of effective tax governance applying to privately owned and wealthy groups, we wanted to pause today on the key ATO guidance available that covers tax governance and where the ATO's specific focus is in relation to the tax governance pillar. Mike, what is some of this guidance?
Thanks, Louis. For the top 100 and top 1,000 groups, the key guidance provided by the ATO can be found in the Tax Risk Management and Review Guide. This guide was last updated on the 12th of August 2022, and the last update clearly shows that the ATO's shift has gone to beyond checking whether or not the policies and procedures exist and started looking at whether or not the management process and procedures are operating effectively within your business. Another critical piece of ATO guidance is the GST Governance Data and Transaction Testing Guide, and this was issued on 15th of July 2020. The purpose of the Data Transaction Testing Guide is to assist taxpayers to prepare for a GST Streamline Assurance Review under the ATO's top 100 and top 1,000 programs, to review the design operation of a taxpayer's GST controls as part of updating its framework, or to undertake data and transaction testing to ensure businesses' systems are correctly reporting GST. As mentioned before, the key guidance for private and wealthy groups is the ATO 7 Principles of Effective Tax Governance Guide. Louis, with all this guidance, where should taxpayers be focusing their energy?
Mike, I have just the summary for you. In the first line in this table, you can see that the Tax Risk Management and Review Guide discusses 4 board and 9 management level controls for taxpayers in the top 100 and top 1,000 groups. Of those, the ATO will focus on 2 board level and 5 management level controls. The 2 key board level controls relate to the controls in place to keep the board informed and to periodic control testing. The management level controls that have the ATO's attention relate to roles and responsibilities across the organization being clearly understood, controls relating to significant or non-routine transactions, controls and processes being documented, controls relating to book-to-tax analysis, and controls relating to capturing and processing of transactions from source to its reporting in the BAS or excise return. Mike, where is the ATO's focus for private and wealthy groups?
For private and wealthy groups, the ATO's focus is on the first 4 controls as set out in the ATO's guide for the 7 Principles of Effective Tax Governance. So these first 4 include Principle 1, which is accountable management and oversight, Principle 2, which is to recognise tax issues and risks, Principle 3, which is seek advice, and Principle 4, which is integrity in reporting. Now that we have the relevant context, we can start delving into the detail.
I agree, Mike. I look forward to start unpacking each of the 7 principles of effective tax governance in our next segments. Thank you, and we'll see you next time.